Good morning, everyone. This is Chrissy from Solstice ATR. I hope everybody's doing great on a Saturday morning. You can find me on the website, on Twitter, Instagram, as well as Discord. You can DM me. We use this for illustration use only, the algorithm for active trading. We are not a broker-dealer. Past performance does not indicate future results. Use at your own risk. And the copy, if you need to copy the material, please request the information or go check the website policy before you do anything. Let's get started. Are we going to be concerned about inflation, or is there something that's happening in the tech sector for the market to continue higher or not? Let's first break it down by taking a look at what we had last week's slide. And last week's slide, I was concerned about the inflation and the geopolitical and the global markets and the debt ceiling, which was kicked down down the road. Nobody's talking about it. The most important thing is talking about the inflation and the overall market in the different sectors to understand where we are heading in the future. On that recent reset, what we can take a see, this was done on September 17, 2021, and I said this is a hypothetical drawdown. If we take a look at the historical factors that happened in September and where we can head to, we almost reached the July low in the charts and eventually reversed. We did not get to an 8% decline. We get around a 6.5% reversal, and we reversed back 100% from the mean. Let's go break it down one by one by taking a look at the S&P 500, and we can see that this is the Nasdaq. Unfortunately, I had the Nasdaq up here. We can see we were in a down channel and eventually reversed. The Nasdaq tech sector, we can use this basically channel. We can click on it once to see how far the drawdown was. And the drawdown on the Nasdaq was 8.3% down. And we reversed from that mean, from the bottom. We retraced back on Thursday the 7.73%, but on Friday the Nasdaq fell a little bit lower, and you can see we had a drawdown of 6.3, reverse back up in the last 5 days since Monday. Let's go look at the S&P by itself, which is the large SPX 500, instead of looking at the E-mini contract. And I just wanted to show this was the prior annual high, and if I take that to the bottom where we got the drawdown, we can see we had a 5.87%. And from that 5.7 reversal, the S&P 500, because it represents more, instead of the tech sector, the biotech, and the Nasdaq 100 is heavily weighted, it represents a more majority overall market. And we can see that we retraced back a 6.56% to the high, but the low of it was basically a 5.73, and the mid of it where we closed at is a 6.24%. We retrace 100% of the move back up. Does this mean we are going to continue higher or not? We have to keep an eye and open mind on inflation in relationship to what the overall market can do for us. Let's break down now by taking a look at the small cap, the RTY, which represent the IWM or the IWN. We can see on the annual chart the IWM has been range bound since January after February of this year, range bound, but the small cap has been trying to knock on the upside to get a breakout. Does this mean we're going to get a continuation in the market for the Christmas holiday? We have to be having an open mind to understand the profile in relationship to the price action. On Friday, the S&P, the Russell was a little bit weaker than the Nasdaq and the Dow Jones Industrial Average, which had, Boeing, Chevron, it's got UP, the bigger boys. So does that mean shipping, credit card companies such as American Express, MasterCard, Visa, transportation going to move higher? Let's break it down one by one. So we know where the Russell is. Let's take a look at the Dow Jones Industrial Average, the YM. We can see that the Dow Jones Industrial Average, since the August high, or we can call the September where we fell down from, we reversed 100% of the mean. We created an annual high on Friday. Does this mean we have 3 tops and a reverse back down, or do we gonna continue? Keep an open mind on the earning reports that are happening in this week. We have Facebook, we have Chevron, we have a couple other companies reporting, and let's keep an open mind on where we are. Let's take a look at the S&P 500, which is the E-mini contract. We can see that the E-mini contract from the high to the low, where the drawdown was, we almost reached the July low. You can see where the July low was, and that was a 7.71 from July to the high. And if I go from here, we had a drawdown of 6.36%. Then we reversed from 6.3 to retrace a 6.84. But look where the close was. It was a 6.32% in relationship to the drawdown 6.36, almost 100% of this. We looked into it. Do we continue or not on this 5-day range that we had the breakout Monday, Tuesday, Wednesday, Thursday, and on Friday we consolidated in relationship to the overall market in the S&P 500. Let's take a look at BTC, and I'll go into gold and crude oil. BTC, this is very important. When we rallied up and we filled 100% of this gap, I said to everybody the annual high was here at 65.5. I said, be careful of that 65.5 in case we retrace through it and we cannot close in it. Look for a reversal back to the mean to fill 100% of this prior gap where we had the gap between here and here, which we never filled. And you can see that the close was just right on retracement of that move. Does this mean the last 2 days in Bitcoin gonna go back and fill the gap to the minor gap here, or do we fill this gap in order to continue higher? I'm not saying that we can retrace all the way down, but I called the top up here 3 days ago. You can go to my Twitter handle, which is Chrissy, capital CHRISI, last name capital FARAH on Twitter. And you can see my tweets on Bitcoin where I called the high and it retraced back down correctly. If I go to the 4-hour, I'm going to do this a little bit more in detail for the Bitcoin, the crypto people, because they're going to bash me and beat me up on Twitter. I'm not saying anything is wrong with a reversal. Sometimes you need, when you go very fast high, you need a relief before continuing higher. Does this mean this bottom here or this gap gonna fill? It doesn't have to. But if things do change, pay attention to this consolidation and the gap, professional gap between the prior day on Thursday and the Friday when it pushed up. We continue, we created a shoulder. This is the head of it. If this is the shoulder, does this mean that the 50 SMA on the 4-hour, can it break above and clear this area or fall back to fill this gap in the prior consolidation before the breakout? And we have another one down here, which is another minor small gap. If we take a look from 2 weeks ago where the move started, we can take this area here, we click on it, we connect it to this high. We had 65% return in less than 3 weeks. Coming back from that area to this area here, which is the close down here, we can take a look at the low where it was. That's an 11% retracement of the 65. That's a good, healthy thing in order to continue higher. But does it continue to fill this gap here, which is a 15%, or does it fill this gap here? You have to have an open mind in consolidation. I think because this is a gap and one, you got these two here as well. I'm not saying it's going to retrace all the way down there. All I'm saying, if it consolidates here and come back to this range here, this means that 20% return, if it retraces in this area and comes back to this range here, that means the drop would be a 15% healthy drop to continue higher. I'm not saying it can continue because it can reverse right here and go back up. Pay attention to the channel, what we can do, because we can connect this dot here to this dot here, and we can call this a channel where we came to, or this one right here. You can see that we are in a nice connection because these two can connecting these two dots can help us to stay in a linear regression up channel. But if this drops, you look for the backside of the consolidation before continuing higher in BTC. Let's take a look at Ethereum ETH just for a quick look. We can see it's in a similar situation. It consolidated, it looked up, came back down a little bit. Doesn't mean it's going to continue or not. Pay attention to where the levels are in relationship to where those gaps are. So what we want to do is this gap, we're going to fix it. We're going to get rid of it. We're going to show where the gap still is, remove drawing. There's a little tiny gap in this area. You can see it to here, and it's going to go across the board all the way to the other side. We can connect this dot here to this high here. You can see the gap, because this is the overnight action. We do not count it. We can right click on it, edit the properties, and move it to the right side couple of days so people can pay attention to see where it is in relationship to where the market is on Ethereum. Let's now take a look at GC. Gold is the canary in the coal mine. I used to think of it similar to the Russell. When there's fear, people turn to basically gold. These days, gold has not been touched. It tries to go back to that 1800 round number, like the tequila bottle 1800. Every time it gets up there, it gets whacked on the head. Does this mean it's tapping on that door for a second, third time? Does it continue higher or not? We have to pay attention to the technicals in relationship to those moves. What I want to do, go 1 year daily to show you how it looks like in relationship to that move down. We are tapping into that area where there was consolidation. We had this range here. We looked into it, then we fell down. We are in a symmetrical triangle. If I connect this dot with this one here, we're still in that band. We're closing inside of it. We have a green box. That means that there's momentum in the RSI stochastic to pick up this move higher. But does it fail at the 116 and 200 SMA? But the 18 and the 50 is holding gold up. If it holds the 1780, does not lose the 1775, I think there is potentially a breakup going to the annual high up here in that symmetrical triangle and eventually trying to retest that candle that broke gold back down, which is around 1865 area, the high of it. So I'm not biased to being bullish on it. If it loses the 1775, I'll look for the backside of this channel or this one for another rebound. If it clears the 1810, I'd look for the backside of this channel to basically give it some life in GC. So let's take a look at crude oil. Since people are talking about inflation, does that mean the cost of crude continuing higher? Every week I anchor the fibs, and if it's retest, every time has been retested. Remove this drawing because this was the prior week Fibonacci. We can see that the weekly I had it up here within. I'm going to activate the drawing and move that fib to the annual high that crude oil made in the last 5 days. It kept testing this area, the $80.45. Eventually that 45 cent, 35 cents was retested a couple of times. It did hold and eventually it broke up. Does this mean it's going to continue in that linear regression? You can see that this channel up here, we have this channel here. Does it mean it's going to continue and come up to this channel or come back halfway through this to make a decision where the 18 SMA is on crude oil? Let's take a look at AAPL. We're going to do a couple of tech, couple of ETFs. You can see it came back to the backside of the channel Friday. Apple has not been able to clear the 149, 150, 125 cents. My concern is the 148.56. If it falls through it, we look for the backside of the 50 and the 18 SMA. If it breaks up this area and the prior consolidation here in this high, this gives us a little bit of life in Apple. But remember, there may be reporting and maybe their numbers is not going to be great. Pay attention to it, similar to the concerns what happened in Facebook that's going to report this coming week. Let's take a look at Amazon. You can see Amazon was retracing back on Friday and Monday and eventually on Wednesday, it gave up. Thursday was an inside day, and eventually Amazon on Friday fell through that linear regression channel that we had from prior and never filled the gap. So we're having higher lows, as you can see from the annual high right here on Amazon. Let's take a look at Facebook. We can see Facebook had a gap down because due to the fact Snap and all the chat medias and other concerns that are happening in the market. Let's take a look at Google. We can see Google, similar situation, tried to break on the weekly, came back in after the Tuesday high. We had Wednesday down day. Thursday was an inside look below, tested 50, bounced back up. And eventually on Friday, we tested the 50, couldn't fill the gap. We tested the lows of Thursday, then fell straight through the 50, the 18, and the backside of the channel to close right on it in order to continue. Does this mean it's creating this shoulder? This is the head of it. This is the shoulder to continue higher, or do we fall back to the backside of the monthly on Google? Let's take a look at Tesla. And we can see that Tesla here has made an annual high for the year due to the report in the earning. Their numbers were a little bit, iffy, but, Elon Musk has a lot of Bitcoin, and it gave the stock a little bit of a more of a push higher. So the most important thing, we have to pay attention to what the market offers us without being biased. And this is the most important in trading. Trade what you see, not what you think, and that will help you stay away from trouble in Twitter. Let's take a look at AXP. We'll do some banks. AXP. You can see that the American Express had a nice numbers. I called it last week and the week before. I said, pay attention to this consolidation. And if we break up in this area, look for the breakout up, and look what American Express, and it did it on the earning as well. If you take a look at MasterCard, MA, you can see MA still consolidating in a baseline. Pay attention to MasterCard. Let's take a look at Goldman Sachs. We can see Goldman Sachs trying to get to the high. If you take a look at BLK, the brokerage firm, it's halfway back. If you take a look at Blackstone BX, it's on an annual high. If you take a look at XLF, the financial sector, it's on an annual high. If you take a look at XLE, you can see it's on an annual high. If you take a look at XLK, and the ETF is almost on an annual high. XLV, the healthcare sector, is trying to come back and recover. It's testing the 50 simple moving average. Pay attention to it. Let's take a look at our SP, the overall market. You can see that the broad market, you can see that we have an annual high. If you take a look at NYA, similar situation, trying to break up to, and it broke up to an annual high eventually on the daily chart, because this represents the overall New York Stock Exchange composite, which gives you a more broader market of the overall markets in the different sectors. So instead of being in the biotech, technology, large cap, the FANGs, so we can see that we are on the other side in the other ETFs. If you take a look at the IEF, let's go back here, put IEF, which is, you can see that the IEF is at the low. IEI, that's the 7-10-year bond. This is the 5-year. You can see it's at the low. If you take a look at the TLT, similar situation. If we take a look at some other sectors in the industry, such as the TNX, I want to show that there's a difference between, the 10-year treasury bond. You can see that the par value is starting to increase. Interest rates still low. Inflation, we have to pay attention to it in relationship with where the VIX is. So I know that people are talking about inflation, are afraid that the market will go, haywire. If you take a look at the 1982, the 1987 events, the 1990s, where inflation was in relationship to where these instruments are, since inflation is still at the lows. I know this cost of things are going a little bit higher, but the overall market, if those stocks are not affected by inflation and consumer goods, consumer products, and people are spending money, unemployment, people going back to work, the economy will boom. Because remember, we had the baby movers, now we have the millennials that are turning, between 35 to 45. These are the ones that are going to be spending money. The baby movers are taking out money on retirement, and spending it to enjoy their life and give some to their grandkids. So that's how I look at it. So just pay attention to what the market offers you. Don't be biased to one side. We can look at Ford. You can see it's on an annual high. General Motors is trying to recover, trying to create a head and shoulder right here. If we take a look at Home Depot, consumer products, that are developing, homes, you go buy a piece of wood or piece of steel, to put it in the foundation. It's costing you, 20 to 30% more. But does this mean that inflation is there? Yeah, it is there. But does it help? It can help. Let's take a look at the transportation, DJT. I just want to put that up. You can see it created an annual high for the weeks, trying to tap into this shoulder. If it creates a shoulder here and continue higher, breaks the annual high, this tells us a lot that things are coming back together. And last but not least, let me do two more. Let's take a look at the VX. This one will show you the gap, because remember, every month there's the contract changes in the VIX and the futures. So you see those gaps in the profile and people think, oh, the VIX gapped up. Oh my God, something is wrong in the market. You can see I highlighted these areas and I marked them to show you where they are in relationship to those gaps. And you can see that this gap, because it has to adjust. If I put the VIX instead, you don't see much of a gap. You see just continuation in the direction of those moves in relationship. Every time we had a little spike, we fell down. We had a little spike, we fell down. This is the May high. This is the June. You remember, this is the May high in the VIX, but the May low in the S&P, similar to the Dow, the Nasdaq. This is the June low, the July low in the S&P in relationship to the high to the VIX. This was the August, and eventually we had that little spike down in the VIX in September. Ever since then, the VIX has not been able to recover to the top. My concerns, once it hits in the $20 range, 21, then these are the concerns I will have, because it's going to eventually break this channel and continue higher. But so far, VIX hasn't showed its hand in the fear gauge. Let's go back to the ES and the profile. And I want to show you this a little bit more in detail in the profile. Instead of going to the regular candles, we go standard. This is the monkey bars on a monthly. You can see where the monthly in relationship where the open is, where the close was, the value area high to value area. That's the shadow. That's the time spent. The sentiment was above 50. It's supposed to look up. It looked up. It fell down because we opened right here. We're grinding back up. In relationship, this was our Friday's close. This is the monthly, which is developing right here, has not closed. Does this mean the time spent can go higher in the POC? Possibly. We still got another week or so to finish the month in October. Okay, let's go now, do it on a timely manner. We can do 1 hour, 20 days, so we can see where we are in relationship to the spike up. We created a couple of virgin control points on the way up. You can see this is a virgin control point. We have another one in here. You can see it, and we continued higher. We were inside the range trying to break up because we retested them. This is our monthly fib measured move extension to the upside, where my 50 acts as the 100, which is the zero line, acts as my 50, and my 0 would act like the 100 because we had to move it down because the time spent was a little bit lower. Does this mean we can get continuation to the upside? We have to pay attention to the 123, 138, and the 161 going back up. And if we fall back down, the 38% is very important area for the S&P to hold, as well as this 50%, which is 4497, 4500 is mental for the S&P 500 on the profile. So I hope this was helpful. I look forward to seeing you in our chat room. Have a good weekend. Enjoy it. Be safe. Take care. Over and out.